Welcome back to the channel, Trader Jan speaking. This video is about my review of the trades from yesterday. Today is the 10th of April. We have now 1 o'clock in the morning, Chicago time, and I'm gonna review the trading day of the 9th of April. We're first gonna look at the locations which we defined the day before for that day, if they made sense. Then we look at the trades, which I did. And bad news at the beginning, I lost my evaluation account, finished the day with, let me check my reports, minus 5,008 ticks. I'm trading micro, and this is minus $2,500, and this was my trading account. So it was a bad day yesterday and made tons of mistakes, but to that one, and the lessons learned here. And it's a painful process, easy to skip because it's painful, but I still want to learn from the mistakes I did. And there's a lot to learn, but we only can learn if we try to take some distance and review it properly. So nevertheless, sticking to the proven procedures, we check the 15 minutes chart first, and review the locations which have been defined. So, looking at the day of yesterday, this is this part here. We did the market preparation with defining the locations around 1 o'clock Chicago time or midnight Chicago time, around this time here. So at that time, we knew only this one being the low and this one being the high of yesterday and this one being the high of the current day. So up until, let's say here, we knew what's going on. The rest of the locations are what they are based on the data which we had up until that time. So looking at it on the 50 minutes charts, this location here, the old day high, held marvelously, and then it went down to that location here, and about 400 ticks. It didn't quite reach that location here, so this one should have been a little bit more higher up, probably before this low volume area here. And then the market declined that one, went back up, respected that location, respected the next location, went back down here, and then straight up to our upper location, which was the high from the day before yesterday. And then it accumulated here. It did a lot of work here, especially in the American session. And finally, it finished at that part here. And today, it is already at the high of one of the days before. No, that was not a high, but it was one of the locations from one of the previous days. That we need to go back here. That's the support area, and I anticipate that this one gonna be a resistance. That one was from the 26th of February, and that area got tested here. And now it was a support area, and now it's gonna be a resistance area. So that works marvelously. I like those locations where previous support areas get now resistance, or the other way around. And I like especially those areas which are the daily extremes of the day. So in terms of locations, worked very well. So being surprised that I still can't use them in my trading. Otherwise, I wouldn't have lost my evaluation account. So looking at the trades now to the part of the day which we don't really like, or I don't really like, because it's all about negatives. But even then, we can learn, right? So let me stretch that one out to the whole thing, so we see the whole magnitude of everything. So started with a long. That one was actually good entry because the market direction changed here. That old lower high got smashed, and then it got there was a higher low being built, and then entering here the market was great. I should have waited until it actually reaches my location, right? 247 ticks. Looks so easy after the facts. And the stop loss would have been manageable, 61 ticks until the end of this one here. So, but I managed somehow to ignore this 143 ticks profit, which was already kind of shaky here. Latest until it broke that low here, I should have gone out of that trade. But hope takes over, and then so then I changed immediately from my long approach here into a short approach, because looking at it, looking from a distant perspective, it roughly looks short. So here I thought, okay, good. Now it goes short, let's go short. And what does the market do? As soon as I go short, the market goes long. And then I did something which I should never have done. I did DCA. So I scaled in that trade. I ended up having 4 contracts at some point. So I went short, tried to defend my short position. I scaled in, scaled in, scaled in. And then eventually when it broke the moment here, that was even higher, right? That was here. So when it's, I think my stop loss was above here, and then it just rang the bell, and the stop loss was taken. And sure, you get angry then because the market goes a little further, and then it goes another 300 ticks down. That's for sure. All this experience contributed. Now here, that was actually the entry was wrong. It was a long trade, but I lost 444 ticks here. And obviously greed took over. I had 300 ticks in the plus. And that was the anticipation of a rejection of the VWAP. I actually, in that case, I should have waited until the next bounce back, not the immediate one. That could have easily gone even deeper, because if you look at the price action here, we could easily go deeper, but I could have read the market, and then here after this lower high was broken, I could have entered here, going either to this location or classically to the VWAP finish from the day before, or even further to the next location. But yeah, I went in early in anticipation. Okay, nothing too bad. It's just the risk was 56 ticks, and then I could have held it, but it was not enough. I keep holding it, and I keep scaling in, and then I lost. This one here was a short trade. One of those typical trades here. I didn't take the 100 ticks stop loss. So the anticipation was, okay, the market goes down here, had a small correction, and then we're gonna check out here. And actually the right entry would have been here, not here after this bullish candle. The right entry would have been here, getting rejected at that slower low, and then would have been here, and I would have been stopped out somewhere there. the price action clearly changed here. Latest here could have been an entry, and then going further down, that was the area which was where the location here could have been better. Now, so I managed to destroy this one here, 330 ticks with one contract. Then I changed to short. That one should have been stopped out. I kept in, but that was not because of some kind of magic wizard something. It was just stupidity and not following my trading rules. It went in a plus, 281 ticks. Then here I was reading, okay, the change of price action here. Okay, and then it went out of that short trade because of this change of price action. And as it typical happens, they go into a trade and then it goes straight down. But here, that was, I think, the only good two trades, or no, only good two trades here, which, no, there was another good trade. That one here, this long, I went out of it after I saw market dynamics change. I went into the short here. I see market dynamics change. I went out of that short. So even though this one was a lost trade, but it was a good trade because I went out of it because the market dynamics changed. This one was a good trade as well because I went into the short and I went out once I saw the market conditions change. This one here, I went here on a short, went out, and then another short. Maybe because I thought, yeah, wrong decision, go in here, down here again, but then the market went long. And the only really good decision I made on the day was this trade here, even though I lost 54 ticks. But here, after this short price action, the market clearly signaled, okay, I accept lower highs, I accept higher lows. And then here as well, and here, when the market came back here, I went into a long trade because the price action changed, broke this line here, changed. I could have waited longer until it breaks again here, but it had already one rotation of the right price action in the right direction. And then something magically happened in my brain. I said, okay, no, because of this one is low. And I think I wanted to, there was huge liquidity laying down here. And I thought, okay, no, the market gonna pick that liquidity. But the liquidity was never being reached again. So I scaled in. I think here was in with 9 contracts also. I scaled in, and eventually the market took. So that's clear bullish price action. So why I stay in that trade, don't ask me. The location here was great, but I think one of the things I did, I was trying to make the market believe that it needs to grab this liquidity which was down here. But the market never did. And others won, I lost. I had 9 trades, which is not quite right because that doesn't include all those scale in trades. 9 trades, minus 5,008 ticks. Lost my evaluation account that day, but tons of learnings, like too many back-to-back trades, too much risk, DCA used, not reading the market changes correctly, greed, so I didn't take the profit, and fighting against the markets. But as a learning to do better is sticking to the stop loss, no back-to-back trades, and follow this freaking price action, especially because I'm trading here the 200 delta chart. So once another candle forms, that means the other side of the market indeed stepped in, because that's a 200 delta shift in that candle here. So that means something. The locations were great. Need to follow those freaking locations. Anyhow, so that's for the day. That was the market review and the trade reviews for the 9th of April. Not a good day, but let's get better based on that. See you down at the trading floor.